We have been seeing bully offers and multiple offers on all kinds of properties in Toronto, and a lot of people are expecting that trend to continue this year. Hi, this is Sid Sur from Team Sur Real Estate, and in this video, I'm going to talk about how the Bank of Canada's decision to hold key interest rate is going to affect the Toronto real estate market in 2023. If you haven't already, please go ahead and subscribe to my channel where I share all things real estate. So let's talk about the obvious. The Bank of Canada has decided to hold its key interest rate at 4.5% after a year of 8 consecutive rate hikes. They've decided to hold a key interest rate at 4.5%, which is the overnight lending rate. So in a nutshell, the overnight lending rate is the rate that commercial banks charge each other in order to borrow and lend money to one another to settle and balance out their cash reserves at the end of the day. The key interest rate is set by the Bank of Canada. Now, why this matters is once the key interest rate increases, the prime rate, which is what commercial banks charge its creditworthy customers, also increases, thereby bringing down affordability and people's ability to borrow money. So the Bank of Canada has been increasing the key interest rate over the last year in order to bring down inflation, which was at or over 8% last year. What that means for real estate is it affects real estate values because when people's ability to borrow money goes down, they're not buying homes, they're not certain about the market, thereby they're able to afford or borrow less money, essentially bringing down home values, which is why we've been seeing this drop in values over the last year. Well, inflation has come down to 5.9%, and the Bank of Canada is now optimistic about its quantitative tightening measures, and they're expecting inflation to be around that 3% mark in the middle of this year. Prior to the March 8th announcement, when they did the January 25th announcement, where they did the 25 basis point rate hike, they had implied that that was going to be the last rate hike, and that brought some consumer confidence into the market. And since then, we have been seeing bully offers and multiple offers on all kinds of properties in Toronto, and a lot of people are expecting that trend to continue this year. We still have a massive shortage of inventory in this market, and we have a lot of pent-up demand that's still on the sidelines, and I expect the spring market to have quite a bit of action. When the February 2023 numbers came out this month, we saw for the first time in almost a year month-over-month increases, indicating that buyers are now more confident and more optimistic about the Toronto real estate market. People are feeling more optimistic about going out and getting pre-approvals, assuming that there will be no more rate hikes. The next rate hike announcement is going to be in April, and I'll be curious to see what that announcement is going to look like, because the Bank of Canada has also said that they're going to continue to closely monitor activity, and they have not ruled out further rate hikes. Do I think that the real estate prices are going to start going on a crazy upswing? I highly doubt that. In my last market update, I predicted that we were going to start seeing a slow and gradual month-over-month price increase, and that's exactly what we're seeing right now, and that's exactly what I think is going to keep happening, again, because inventory is still low, supply is low. Builders are shelving their projects this year because of their own uncertainty and because of a lack of sales in the pre-construction market. And that's unfortunately going to create a perfect storm in a few years once there's no more new inventory in the market, which is going to drive up the existing inventory prices up. And because of immigration and this continued upward trajectory of demand, we're going to be in a very tough spot. So if you are a buyer, I highly suggest you get in the market this year through either pre-construction or resale, because demand is still quite low, but there's a lot of pent-up demand in the sidelines. Once rates start going down, which is not going to happen this year, but likely start happening next year, we're going to see a flood of buyers re-enter the market, and with the already limited supply that we have in this market, real estate prices are going to start skyrocketing. The best time to buy real estate has typically been in the winter months because competition is very low. Buyers typically don't like shopping for real estate in the winter months, especially in this country, because of how cold it is, and sellers that typically sell in the winter tend to be more motivated. So you still have a short window of time before the spring market comes in, where more and more buyers start coming out. And if you are a seller, I suggest, if your home is ready and you are ready to sell your home, this is the right time to do it, because again, There's going to be more inventory coming out in the spring market, so you do not want to be competing with additional homes in your area, essentially. So there you have it, everyone. The real estate market in Toronto is looking up. If you are a buyer or seller in this market in Toronto long term, you know you're always going to do well just because of how resilient the Toronto market has always been. I hope you found some value in this video. Please go ahead and like and share. And of course, don't forget to subscribe. I'll see you next time.